Hey everyone, I just want to explain to you how some of the forex pairs can be expensive to trade because of the swap rates. So what a swap rate is basically it's interest paid or received for holding a position overnight for more than 1 day, basically. And it can be either negative or positive, is depending on what kind of pair you trade. And also if you are longing it or shorting it. Um, and the thing is measured on a one lot. And also what you need to bear in mind is that Wednesday is a triple swap day for FX pairs, and this is because the markets are closed on Saturday and Sunday. Now, so you can look at the majors. You can look here. Um, so longing the majors is different and shorting the majors is different. This is global prime that I'm using. So they actually are quite transparent. Otherwise, you have to go on some of the brokers. You have to go on the MetaTrader and then look at it individually. But most brokers do give this information as they have to. Um, and over here you can see. So, for example, shorting the AUD, you are actually getting a positive swap of 1.33. They're paying you for holding the position every day. The same with the euro. Um, the pound is slightly negative, USD CAD negative, USD Swissy. Shorting it is also negative because, as you know, Swiss rate is a lot lower than USD. So you would actually benefit from longing the USD because they have the positive rates, interest rates. So they would be paying you nearly $5 for holding that position. And the yen pairs are actually one of the ones that, of the majors that are really expensive to short because the yen has negative interest rate and the USD is 5.5%. So shorting the USD yen is not really great, especially if you're swing trading because you are accumulating the swaps depending on the number of days you are holding the position. So if you hold that for 2 days, that's already you're $60 down. And if your trade hasn't moved anywhere, then you could be in a loss even at entry. So that's why it's quite important. So yeah, if you're day trading, this stuff does not really matter. But if you're swing trading or holding positions for many number of days, then it does. But yeah, you can see there if you're longing it, it does go in your favor. They're paying you $13 for every single day you hold it. Now the miners are also something you need to keep an eye on. Some of them are good, some of them are not very good. Again, the yen pairs, cross pairs are very expensive, and also the Swiss pairs, cross pairs. So because they have the lowest um, interest rates, so it does affect them when they are longing or shorting. So it's the same scenario here. The yen pairs are very expensive to short, and so is the Swiss pairs. Um, but yeah, it's quite risky anyway at the moment to kind of long the yen pairs because you have this intervention that's going on um, that they could possibly. I've already tried it once and then twice. It was today. I think they did. But be careful with the yen pairs and also the Swiss. They are quite likely to intervene in the market if their currency gets too strong. So keep an eye on this. Have a look around with whichever broker you're going on and type it in Google. Have a look because if you're swing trading, then you should be aware of this because some of the pairs they are very expensive because you could just end up in a loss. Happy trading.